does not hold any shares in any of these companies presenting today, but we do act as advisor to all of them.
Thank you. Now I will hand it over to you. Please continue with the following content.
Right. Thank you. Good morning, good afternoon, good evening, wherever you are. Welcome to Tiger Brokers investors to this Richlink Tiger Brokers joint event. I believe this is our ninth joint function where we showcase Australian listed companies. Today, we're delighted to have invited three companies. Today's theme is gold. So these three companies are all involved in developing gold mining operations, exploring for gold. Their projects are at various developmental stage and located in Australia and overseas. The first company presenting today is Black Cat Syndicate. The person presenting today is Managing Director Gareth. Gareth has a first-class honors degree in earth science from the University of Melbourne. His career incorporates over 24 years mining industry experience, covering numerous ore body types in both underground and surface environments, with a proven ability in leading mine geology, resource development, and near mine exploration teams. Gareth has worked in his way up from mine geologist to chief operations geologist and registered mine manager's position in both open cut and underground operations, which include 11 years senior management experience with many well-known Australian and also international companies. And of particular relevance, he was the chief geologist and late resident manager at Mount Monger, which is similar in many ways to Paulson's and involved managing a workforce of approximately 200. So clearly, Gareth, you're a very experienced miner. With that, I pass it to you to tell our audience the BC8, which is the Black Cat Syndicate's code on ASX story. Gareth?
Thank you, George. And good morning or good afternoon, ladies and gentlemen. It's a pleasure to be presenting to Tiger Brokers and gold investors. We are a gold-focused business, as George has outlined. We have been exploring in Western Australia for about 5 to 6 years now, and we have amassed and built up about 2.5 million ounces of high-grade gold across 3 projects, all within Western Australia. We are moving into production next year, so our intent is to start production at Paulson's. Subsequently, we will also start production at Coyote and Cal East in the future, and we will, in this way, sequentially build ourselves to a 150,000+ ounce producer. So we have 3 projects, all with very high-grade resources, lots of exploration potential. We have other commodities in our portfolio apart from just gold, but we are very much a gold-focused business. We have built infrastructure at 2 of our projects, being Paulson's and Coyote. That brings down costs and brings down risk associated with getting those particular projects up and running. And we are now fully funded thanks to some investment from some Chinese investors, which I'll talk to later in this slide pack. And then the last point, George highlighted my experience, but I've got an even more experienced board and a just as experienced management team that will be running this business, and all have production experience to get this going. So this is just a little bit of background and where we've we've come to now. So we listed in 2018 with no resource, just a small tenement holding outside of Kalgoorlie. We made some discoveries in that first year, and we also started acquiring projects around us. So we built up 1.3 million ounces at Kalgoorlie over a 4-year period, and we spent a fair bit of time and effort putting in some technical work to get a study to a feasibility level to show that we can go and produce from that asset. The construction environment around Kalgoorlie is pretty lean. It's very busy, and there's lots of projects going on. Just over 12 months ago now, we bought 2 other assets, being Coyote and Paulsens. They were high-grade assets with infrastructure already established, and we've set about over the last 12 months drilling those out and building up new studies to show that we can restart those operations. So with only about 6 months drilling at Coyote, we've increased that particular resource 161%. It's one of the highest grade deposits at almost 15 grams per tonne in the underground in Australia. That has a 5-year life of mine. Cal East itself has a 5-year life of mine, and Paulsens, we just released a study last week showing a more than 4-year life of mine. With 10 months of drilling at Paulsens, we've increased the resource base there in the underground 4.6 times. It's still growing strong, and we're still drilling in the region. So we are proven, finders of gold, and we have in the past been proven to be good developers and producers, and we'll get to that in the next 12 months. Most of this presentation, I'll talk to Paulsens. That is the asset that we will start first. It's also the asset that Northern Star started their production journey. They were an explorer before they bought this. It's a fantastic ore body that allowed them to generate cash flow, leverage off that to buy other assets. It'll do the same for us. It's the only gold processing facility for about a 400-kilometre radius, which leaves it well placed to dominate the area. We have about 1,250 square kilometres of highly prospective ground, lots of potential for more gold and base metals, particularly copper, in the area. Here's an overview and an aerial image of the asset at the moment, or from July. It's got well-established infrastructure, offices, camp, courtyard, etc., ready to be switched back on after a small amount of refurbishment. Importantly here, I guess the decline, the underground mine is fully dewatered and ventilated, which means we can get right down to the bottom right now. And we've been drilling in that over the last sort of 10 months or so. In terms of the infrastructure, we've got the mill, obviously, we've got power stations, we've got fans, and it's a fully, as I said, fully ventilated and dewatered underground already, kept in good condition. We've got a camp that facilitates, all the personnel we'll need. And then, of course, we've got a very well-established courtyard with a lot of geological data, which we're adding to as we go. So Paulsens itself was mined for about 12 years. It produced a million ounces. 1 million ounces were mined out of this. So it averages about 1,000 ounces per vertical metre. The red area here is basically what was mined. The decline is in black, so you can see where the workings were extended to. And what we've been setting about this year doing is drilling the Football Gabbro zone, drilling additional extensions around the main zone and below the main zone. So the main zone is the primary target that's produced 1 million ounces, as I say. It's open at depth. It has potential to keep going and produce a lot more. There's also the eastern zone, the Football Gabbro zone, and the Paulsens repeat. All have the potential to be, replications or something similar in terms of style of mineralisation to the Paulsens ore body itself. The eastern zone has some access, and we've been drilling up surface, as well as we've put a few holes in deeper down. We've got good, thick, high-grade quartz in some of the areas that we've drilled. So there's certainly good structure out there. Football Gabbro zone features strongly in our current mine plan. There's a lot of gold there, and that is sitting immediately adjacent to the established workings, so that's easily accessible and will be mined in our first year. And then the Paulsens repeat is a target that we haven't still drill tested that. We've started putting some holes into that. We have found the shear continues. It's potentially a replication of the Paulsens system, being another break in a gabbro system. So that remains a target that we'll continue to drill and look for once we get into production. In terms of the study itself that we've just released, this is the basis of where we'll start, but we'll do more than what's in this study. But since July to November, July we published our first study. November, after another few months of drilling, we've published another study, and we've had a market improvement. So about a 30% improvement in terms of the gold mined, about a 33% improvement in terms of the gold produced, and about a 36% improvement in terms of the operating cash flow. Our all-in sustaining cost has come down slightly, and importantly, our max drawdown. So, the upfront capital requirements have come down as we've been able to spend time on site, turn things on, look at what is needed and what's already working well. So all in all, improvements across the board. This forms a fantastic start for us to get established and produce cash. We'll build towards our long-term goal of 60 to 70,000 ounces per annum, which is the actual run rate that this mine produced at on average over the 12 years previously. And outside of this plan, what we can't publish is the fact that there's a whole heap of high grades in this system that currently aren't in resource. Therefore, they can't be in an ASX mine plan, but they can be things that we go and target once we start mining. This provides an example of some of those areas. Look, all the small dots are drill holes that haven't been mined. The large diamonds on this image are intercepts that haven't been mined, or have been mined through, sampled, and never followed up. We've been going through and sampling ourselves, newer areas that look great. 5 meters at 10.2 in this new zone that we've sampled, and there's a lot more work going on in this space. There's going to be a lot more of these that we find. Some of the other areas that previous operators like Northern Star mined through and left behind, 3.4 at 76 grams per tonne. So we'll put an air leg on that when we restart this operation, and that will be high-grade feed that's not captured in the study at the moment. So there's obviously additional cash flow that will come in from these areas, and we hope to be able to better the study outcomes once we start operations. At the moment, we're also quite excited about Belvedere. We've updated the resource here based on the historic drilling. There's a 30,000 ounces at 6.6 grams per tonne. About 20,000 of that comes into the study as a new underground. This was mined historically back in the 30s, but not with any sort of modern mechanised mining method. So we'll put a new decline in here, get at least 20,000 ounces out of this. And of course, it's open, so we'll continue on as required. We're actually drilling to the north of this at the moment, looking to add additional ounces, not immediately adjacent to the actual resource at the moment, but new things that occur along strike. So some quite exciting exploration that's happening for the first time in pretty much a decade in this area. And Belvedere is just one of the many targets that we have in the Paulsens area. We've pegged around Big Sarah, which is effectively a lookalike of Paulsens from the early days, in that it was mined historically, a small amount of high grade, and has never been drilled. So who knows what that'll provide. But all in all, across the portfolio, we've got sort of 1.5 to 2.5 million ounce exploration targets that we've published. And that's the sort of size of the prize that we're looking to find as we go here. There's also a lot of base metals. We have strong lead, copper, silver, gold, and antimony results at Mount Clement, and there's a resource there. And we're actively looking for other base metals in the area as well. In terms of getting this up and running, there's about a 26-week restart plan, which is effectively a large shutdown It's a well-established mill, hasn't been operated for 5+ years. So for us, it's about coming back in, turning things on, making sure they're working, and we're starting that process already. But some things will need some money spent on them, and that's all captured in our current study. There's a 26 weeks worth of work that'll go into that, and that should see us pouring gold in the second half of the year. Quickly talk to Coyote. It's up in the Kimberley, in the north of the state, right against the border of the Northern Territory. Again, we have established infrastructure here, which is the only plant within a sort of 200-kilometre radius. It's fantastic exploration country. Really big, high-grade targets are the key here. And we have a very high-grade resource being the Coyote Underground, which is 360,000 ounces at almost 15 grams per tonne. So we've published a scoping study here in the middle of the year. It shows 176 million cash flow, very good all-in sustaining costs, and obviously there's a lot of exploration potential in this area that we'll get to. So we've only put about 6 months worth of drilling here, and we have increased this resource by sort of 160% in that time frame. And already we have a 5-year base case mine plan with a whole heap of upside that's been left out of this study. So that'll be a focus for us going forward, is as our second project, what else can we bring in? There's just an image showing the underground that's in the plan and a lot of the high-grade resource that's currently excluded but will be brought in time. Kalgoorlie East, or Cal East project, we have a significant land holding within 50 kilometres of Kalgoorlie, which is one of the premier gold mining regions in the world. 1.3 million ounces at 2.1 grams per tonne. Our July study showed 168 million cash flow from this after we spend some capital and build a brand new facility to the east of Kalgoorlie. It would be the only mill on the east of Kalgoorlie once we get that up and running. This is our third plan, but we have done a lot of work already. It's designed, permitted. We've got approvals in place, and certainly we're looking forward to getting this built in the future. So the base case production looks at only sort of half of our resource base here in Kalgoorlie, and there's certainly a lot of upside, a lot of discovery potential, as well as a lot of upside in our current resource base. So we have the 3 projects. We'll start with Paulsens first, Coyote second, Cal East. That sequence is really predicated on the fact that the lowest capital at Paulsens through to the highest capital at Cal East, as well as the amount of work required to get Paulsens going compared to Cal East in the current environment with Kalgoorlie. But they're all fantastic projects. Once they're all up and running, we'll be producing 150 to 180,000 ounces per annum. Because there's established infrastructure and there's low capital, there's reduced risk to get these things going, and they're going to produce strong cash flow and set us on a path to production. As I mentioned, we have funding already set up. This is coming in March. So we've got 2 investors out of China. We're going to call them Minjing and Southeast Minqing, and they're tipping in equity to the value of 45 million Australian, as well as a $15 million secured debt facility, and that gives us fully funding to get this up and running. At the moment, we're going through the FIRB and the Chinese regulatory approvals. Next week, we'll have our Black Cat shareholder meeting to approve this transaction. So looking forward to March 24 when this money comes in and we can get into construction. Just really briefly on the current position of the company, 304 million shares on issue, about an $80 million market cap at that rate, 5 million in the bank at the end of September. Directors have about 10% of the stock, having invested about 8.7 million of their own funds to date. And obviously, once we get the funding in place, there'll be more shares on issue, our new large shareholders, but we'll have a lot of money in the bank and we'll be on the path to production. The directors include Paul Chapman and Les Davis, who founded Silver Lake Resources. Philip Crutchfield, he's actually resigned now, but at the AGM next week. He's a barrister from the East Coast. Tony Polglaze has built mills all around the world, so he's our expert in all things milling. And once we do get into production, obviously, then we can expect some sort of re-rate. How do you value that? Well, if you look at the average enterprise value of junior producers, if you're producing 50,000 ounces per annum, you might expect an enterprise value of 240 million. 100,000 ounces, which would where would be at with two producing assets, you could expect almost 500 million enterprise value, and 150 would be 720. So this is what we're hoping to get, once we're in production, a re-rate as a producer, as well as producing cash flow and looking for opportunities. So just to recap, 2.5 million ounces of very high-grade gold resources across 3 projects. We have a pathway to production for not just the first project, but also all 3 projects, and that'll set us up for 150,000+ ounces per annum. We've got established infrastructure, which means low capital, low risk. We have a team that has done this before, and we're certainly looking forward to doing this again. So, George, I think I might have gone over a little bit.
Yes, thank you for that, which means I'll ask only one question. I have a few here, but I will feed that through. You may provide a reply later on. The question is, the person who raised the question basically said he or she noticed Black Cat has issued a lot shares in recent times. What's your expectation, the impact on the share price going forward?
Well, I think I may have answered that already with these couple of slides. I mean, once the funding package from our new investors comes in March, there'll be about 504 million shares on market. However, we'll be on a pathway to production, which means, we're setting ourselves up for producing 50,000+ ounces per annum. So I expect that the enterprise value of the business would increase, and therefore you could expect the share price to increase as well. But I guess time will tell. But the main thing is that we have the money coming in, so we won't have to keep going back to the market again after that. We're fully funded, and we'll be able to be masters of our own destiny with cash flow coming in.
Right. Gareth, please stay online. I'll, through the chat box, feed through the other questions people have raised, so you can answer before you leave. The next company presenting is Golden Mile Resources. Representing the company today is its managing director, Damon. Damon is a man engineer with over 26 years of experience, inclusive of 15-year mine management and executive roles. He has worked in studies, projects, operations, and innovation across Australia, USA, PNG, and Africa. Damon has had considerable success turning around mining projects and studies resulting in the construction of multiple mines in Africa, as well as significant operational success in Australia. He has also been heavily involved in mining innovation and has personally developed the techniques and strategies for the mining industry. As MD of Golden Mile, Damon is focused on advancing an exciting quicksilver, nickel, cobalt project and exploring the I would not want to Luminary gold project, both located in Western Australia. Apologies for not being able to pronounce the name. With that, I hand it over to Damon.
Thank you, George. And I think it's just a really topical point at the moment. One of those projects that was turned around in Africa just sold this week to MMG for $1.87 billion US. So It's a great little highlight and segue. But we're here to talk about Golden Mile. and Golden Mile is predominantly a nickel and gold company. Our focus is on our Quicksilver project, and I'll talk to the portfolio just now as we're going through it. So we have our key project, which is our Quicksilver project, which we are driving hard. We already have a defined resource on that. We typically refer to Quicksilver as a nickel cobalt iron project. However, we do get gold there, which I'll talk to in more detail as we go through this presentation, as the gold is becoming a very new thing there. We also have our Yunmeri project, which we're testing a lot of high priority targets and conducting soil sampling work, and we'll go through the detail. And then we have a cluster of other assets within our portfolio. 2 of those assets on gold are already joint ventured out, and we like joint ventures because it gives us exposure to that asset as while it's being developed by someone else without the expense of developing that asset. And we've also just received our marble bar tenements in the last couple of months, our 2 out of our 3 tenements there, which has highly prospective for gold and lithium. But we'll talk about Golden Mile. I'll talk about Quicksilver first, and then we'll drill down into Yunmeri. Now, I am going to talk about nickel quite a bit to start with, and it's really important that we understand what we already have there before we move on to gold. And a good rule of thumb to keep visualizing, well, what does 1% nickel mean? What does 2% nickel mean? The ratio, when we look at a pure price ratio between gold and nickel, it ratios between about 3 grams per ton gold equates to about 1% nickel. It's a little bit lower at the moment, so the ratio is between 2.5 and 3. But a good rule of thumb is 2.5, 3 grams per ton gold equates to 1% nickel. So what we already have at Quicksilver is a resource of 26.3 million tonne at 0.64% nickel and 0.04% cobalt. Overall, it's got about 180,000 tonne of contained metal within that resource. Now, that resource was defined, I should say, in 2018. A lot of work has been done post that point. We've identified rare earths within this ore body as well, and there's further work to go there. We've also identified significant scandium mineralization. And then we've even got further into identifying high-grade nickel zones within the deposit. And that becomes really important from a mineability point of view. And testing those orientations. And to give an example, we are getting in certain aspects of what we're seeing between 2 and 3% nickel being achieved on hand-prepared samples when it comes to the mica. And again, I'll talk more to that just now. The metallurgy drives Quicksilver, and it's a good place to start before we actually talk to the geology, because it's important to know what we're getting and what we can sell and what we can derive value from. First of all, we're getting mica concentrates. From the test work we conducted in August, we were getting between 2 and 3% nickel in those mica concentrates. And with further test work, we're now actually getting concentrates up to 4.5% nickel, which is, when you put it into a gold equivalent, is a very high number. We also generate, through simple magnetic separation, a very clean iron ore product, which is also bearing nickel. So we've cleaned that up to 0.64% nickel, which is also running 54.1% iron and 10.7% chromium, and importantly, with very low silica, and it also has low aluminium. So it's a very desirable input for the stainless steel market. Our metallurgical system is based on simple beneficiation to clean these products up. So very mechanical, no harsh chemical processes at the moment. We are doing further test work on some, particularly with the mica, on our grades to look at where we can drive further value. But what came out of the test work, which was really exciting for us, was we were starting to get gold separating out, ranging in between 0.1 to 2.3 grams per tonne gold off our table work, which is simply a mechanical separation, vibrating tables, for want of a better term, to get into different particle sizes. But we weren't looking for gold. The ore body doesn't show up that it's got very much gold in ore, but now we're starting to get gold reporting out of all our samples that we've got. So now that becomes really interesting geologically, because first of all, this is additional revenue, additional revenue streams that this project can have. And we're in our infancy of understanding it in terms of the gold. When we look at the geology of the system, and this gets very interesting to us, and I'll talk to the geology for a bit, but then I'll bring it back to gold. One of the key things in our geology that we've got, first of all, we've got nickel appearing in all our oxide zones that we've got down to about the 100-meter mark, which is where we see that change of color from the sap rock into the ultramafics. Importantly, we don't have a limonite layer. Now, why that's important within this, and it's a very driving point, that the processing, the HPAL process, which is a high capital intense process, was designed to extract nickel out of limonite. As this ore body does not have limonite, we're not dependent on an HPAL process or a high capital process for extraction. And what we are seeing is certainly the very high grade nickel, which we believe have been structurally controlled by the mica zones. And we're seeing this high structural control with that, which is great, because the more we can identify high grade in structure, the more we can selectively mine and upgrade our entire case. And then, but what we have also further underneath in all this is a ultramafic protolith. But importantly, we've got this intrusion about 200 meters down, which we have we've only just identified in the last few months, which could quite easily be, which has the potential to be the source of the gold, because this is, a very rich, fertile overall system that we've got here for metals. But we've got to do a lot more work. We've got to understand it. But the fact that gold's coming in as well now is a huge upside for this project. I'll talk a little bit about more structural orientation just to give context, because having grade is one thing. Having size and structure and grade is a whole different ballgame from a mining point of view. And what we are seeing is the potential to have up to these 600-meter long structures, where we could have our micas loading up. Now, the mica is very important, because what the mica is doing, or in an oxide zone, it's called vermiculite, as the mica has been altered. It acts like a huge sponge. So you've got this massive solution of nickel in clays and everything else, and this mica has just been sucking up this nickel over tens of thousands to 100-odd thousand years. And we've potentially got multiples of these structures. Now, these are important because when we start talking grade and orientation and mineability, being able to find these things, drill them, and prove up becomes massive for the upside. And of course, at the moment, we were getting gold out of all our samples that we'd taken on this ore body in the PQ drilling program. And it's important to understand what we start talking about when we talk the high-grade channels. So what we're now doing is looking right down end on through that shape that we had on the screen previously. I'll just jump back actually, right through the end, looking end on and looking right through. Now, what's important here is we've got a cluster of high-grade holes and also no barren holes in this. So what we're actually seeing in these high-grade channels, and this is our primary one we've identified, but we certainly believe there's a lot more of these in the ore body, that we're getting much higher grades in this channel. Now, that's really important, obviously, from a value proposition, because where we are as a project, we'll be moving this project into scoping study where we are. And scoping study effectively starts when we commence the next drilling program. Now, we've got some very impressive widths, some very impressive grades. And as I say, this does not include any of the gold that's contained within this either. When I talk about the program for Quicksilver, is that we want to go through and move into a big infill drill program. That infill drill program will be designed to target high grade and also give us more understanding of the gold where we can. And then what we'll be driving into is a new mineral resource, and then into a scoping study that we'll be looking to close out early in Q3 this next year. And what we end up with is, so from a value point of view, we're putting out a lot of information. We will have an awful lot of design work coming up. And importantly, our overall capital play for Quicksilver is very much a beneficiated, low capital mining operation, and then a logistical play on shipment of products. And we'll further add to that where we can extract secondary processing in terms of leach work or things for high value products, we'll be doing the test work and evaluating those as we go. But in essence, we've got approximately $5 billion of metal, contained metal in ground at the moment, just at Quicksilver. We only need to be able to mine a portion of that to extract high value. And the plan is to push Quicksilver through its study phases and bring Quicksilver into production as soon as we practically can. So we'll be looking at a timeline to production of ideally sometime in late 25, and that's permit dependent. However, this ore body sits in the top 100 meters of our current resource, so it's very shallow. The ore streams come online very quick. The process is mechanical, and we can very easily deliver high-value products from that process. But I want to change to Ewan Mary, because Ewan Mary is our second program that we have at the moment. Ewan Mary is located approximately 11.5 kilometers away from you and me. This is about 500 kilometers northeast of Perth. And why the proximity? So there's a few things we like about Ewan Mary. In fact, there's a lot of things we like about Ewan Mary. But first of all, we are 11.5 kilometers away from Ewan Mary. Ewan Mary is a plus 3.2 million ounce resource already. And importantly, it's in the same structural orientation. So when we look at the structural orientation of Ewan Mary on the left, we're effectively on a parallel fault sitting off to the east of Ewan Mary. And in the gold business in particular, structure is extremely important to gold mineralization. The zone we actually have at Ewan Mary is 5.8 kilometers long by 1.1 kilometer wide of good gold in soil enrichment. And we actually have we've got a lot of faulting structures within there. And we've just completed a small drill program and big soil sampling program to gain a lot more detail and a lot more information. So what we are now seeing at Ewan Mary, we completed 5 holes there, selectively picking out some targets to get a much better understanding of the stratigraphy, potentially identify some more gold. But then we conducted a comprehensive soil campaign across the largest, and we can sort of see on the map to the right, the larger identified anomaly, a comprehensive soil campaign to help delineate targets there. But Ewan Mary is a very highly prospective target to us. It's in a great area, which is one of the few leases, or few tenements, I should say, that's not actually covered by native title, which means it can be streamlined further on down the track. And we know it's already in the right location to significant gold resources currently identified. And moving on to corporate, I want to talk a little bit about the team. I know everybody likes to talk about the team, but I want to point out some really key, important facts about what we do. Importantly, we can talk to experience, and we have an experienced board, but more importantly, we have a history of demonstrated success. We have a history of demonstrated success in the discovery of ore bodies, in the development of ore bodies, and the delivery of production. And that's been across multiple continents around the world, where that's been achieved by different members of our board. And we're very, very comfortable in how to approach how we build assets and build value, not only for the company, but in particular build value for our shareholders. We've only got 320 odd million shares on offer, and as of where we are on this slide was put together, a share price of 2.2 cents, which is currently where we are today, and around that market cap of $7 million, which, considering the amount of resource we currently have defined and the amount of upside potential within our assets, is a massively cheap price it's a massively cheap market cap for the value of our assets. We had just under 1.3 million cash at bank at the end of September, and the board have taken up 10.5% of the company is actually in the board and management's hands as shares as we speak. Just to finish off, the usual disclaimer on covering our presentations. However, this is simply a fantastic play for both gold and base metals, and with a streamlined production pipeline to advance projects from discovery right through to production. Thank you.
Yeah, thank you, Damon, for that. And also thank you for slowing down while talking. Couple of comments coming in. Congratulations on Quicksilver nickel cobalt project latest progress. What's your expectation of the future benefit to your shareholders? Have you considered working with Chinese investors?
The short answer is, look, we see huge upside to Quicksilver from where we are today. Certainly in terms of, I think personally a market cap of $7 million just for Quicksilver is extremely cheap by itself, let alone everything else we've got. And we're certainly open to looking at all forms of investment and investors within Quicksilver. It's why we have a relationship with Richlink, and Richlink are, active in our relationship in what we do in looking for investors and how we do work. So certainly open to Chinese investment as well as investment from all around the world.
Right. One last question, given the time. Could you comment on the gold market and then what the company plans to do to take advantage of the gold market and generate sustainable return for your investors?
Okay, so in terms of the gold market, obviously the inclusion of gold now, what we're seeing in Quicksilver, brings gold to the revenue streams for Quicksilver. But I'll park Quicksilver because I think it's more important to talk about the other assets in regards to that. So a couple of key points. One is bringing Quicksilver through projects and project work is always going to cost money. So we've got to be very pragmatic about how we spend our money. And certainly we look at all the ways. If I bring it back just to my second slide, and I think it's a key point here. We always look at strategic joint venture agreements and other ways to look at developing assets so it can drive value for Golden Mile and our shareholders, while we're making sure that we can bring our core project along as well. So it's always about that balancing act on where we put money and where we look to form relationships on particular assets to help bring those along as well.
Thank you, Damon. I'm afraid we just have to move on. The next company presenting today is Antilles Gold, presenting for AAU. It's the Australian ASX code. Is its chairman Brian Johnson and exploration director Dr. Chris Grainger. Brian is a graduate in civil engineering from the University of Western Australia and a member of the Institute of Engineers Australia, with extensive experience in the construction and mining industry in Australia, Southeast Asia, and North America. He was instrumental in establishing successful companies, Portman Limited, Mount Gibson Iron Limited in the iron ore industry, and South Blackwater Coal Limited and Austral Coal Limited in the coal sector. He has previously been a director of 2 listed gold producers and of companies in with the stock exchange listings in London, New York, Vancouver, and Australia. With that, I'll hand over to Brian to tell us the AAU story.
Thanks, George. Am I coming up on the screen there?
Yes, your screen is shared. You need to put the slideshow on, which is a button at the bottom. Yes. There you go.
Okay. All right. Well, thank you, George, and thank you, ladies and gentlemen. Particular thanks to Tiger Brokers and Richlink Capital for allowing Chris Grainger and myself to present this morning. Antilles Gold is a quite small ASX-listed mining company. We're very ambitious. We intend to become a significant gold and copper producer in Cuba, where we're focusing our attention. And I believe that we will reach this aim because we have very talented executives and first-class assets to develop. Now, I'll just speak about the two gold projects that we're working on at the moment, both near-term development, and then Chris Grainger, who's our Director of Exploration, would talk about the potential of our copper prospects in Cuba. Fundamentally, the company is focused on three. Hang on, I'll get my video going. There we go. Sorry. So the company is actually focused on three distinct projects. The first one is the development of a very small or low capex gold copper mine. It's predominantly a copper mine with a high grade gold cap. That mine, and I'll talk a little bit more about it in detail in a moment, is in central Cuba, and we expect to start construction of this mine in June of next year. It's a 10-month construction period. We should be up and running and producing about 50,000 ounces a year of gold. It's only quite small, only for a few years, and that'll be followed by probably about 45,000 tonne of 25% copper for 6 to 7 years. The second mine development is known as La Demahagua. We got into Cuba effectively in 2018 when the government mining company Minera invited us to become their partner in the largest known gold deposit in the country, which is called La Demahagua. And we've worked on that for the last couple of years. We've added about 30,000 metres of drilling to the 50,000 metres of historic drilling. We have JORC resources of about 905,000 ounces gold equivalent for the open pit, and we expect to generate with additional drilling another probably 1 million ounces with underground potential. But at the moment, we're focused on developing the open pit mine. Now, together with that mine is a sulfidic ore body, primarily, some oxide ore. There's a difficulty in marketing the gold arsenopyrite concentrate that will be produced. So we've recently added the concept of developing a concentrate processing facility at La Demahagua, and that will involve building a 75,000 tonne per year two-stage fluid bed roaster, very similar to what is used predominantly for smelting in China. And we'll couple that with a 100,000 tonne per year CIL circuit for producing a doré. And that doré will probably go to China for refining. Not only will we produce the concentrate that's produced from La Demahagua, but we also intend to import about 25,000 tonne per year of what's called a gold pyrite concentrate from the region. Now, the third element, and this is what Chris will talk about, the third element to our business is concessions that hold a large porphyry deposit in central Cuba named El Pilar. It's a system there that Chris will describe. And in addition to that, we have 3 concessions in the Sierra Maestra copper belt, which is in the southeast of Cuba. So that's just a snapshot of 3 arms to the company, if I can call them that. We'll go to the next slide. to work. Well, George.
The arrow key should work.
What's that?
Your arrow key should allow you to move.
Yeah, well, it's not working here.
Well, your mouse have a wheel. If you
there we go. All right, got him now. All right. We'll often question why we're investing in Cuba, and these are just a summary of a few main points. The country is, and Chris, as a geologist, will explain better. The country is mineral rich. It's underexplored. Very low operating costs in Cuba, and mineral royalties are quite low also. The government, despite being communist, is very stable. It's encouraging foreign investment in the mining sector, and we have in Cuba very realistic mining and environmental regulations. Antilles Gold has developed really good relationships with Minera over the last 4 or 5 years, and this has resulted in a number of development opportunities. And also, having the government as our partner, this de-risks permitting. For example, our environmental permit for the La Demagogia project, I think, took us less than 3 months. In Western Australia, that could take 3 years, depending on the project. We have investment incentives under the foreign investment law, including waiving of income tax for about 8 years. Import duties for capital equipment are waived. We have the benefit of nominating all senior management to the joint ventures, and we control the exploration programs through Chris, effectively. Our workforce there, the Cuban workforce, are highly educated. They're very motivated, and we've got a really good team on the ground in Havana. One element of the joint venture which is important is that we negotiated the requirement of the joint venture to keep all proceeds from incoming proceeds from loans or incoming proceeds from sale of concentrates or gold being deposited in a foreign bank account. And the only funds that actually go back to Cuba are for local creditors and government charges and so forth. And this eliminates the country credit risk for our suppliers in particular, most of whom, by the way, come from China. Just as an aside, Sherritt, some people will know of, they're a very major, really large Canadian company that have been in Cuba for many, many years in nickel and cobalt and are expanding. Trafigura there with a base metals mine, Castellanos, which is producing lead and zinc concentrates, and they're about to start exploring a large copper property to bring that on stream in due course. A Sydney-based company, Melbana Energy, from Australia, are heavily invested there in Cuba in the oil and gas sector. And basically, our little company, Antilles Gold, probably will be the next. So that's a snapshot of what we're all about. We've got a lot of shares on issue, 800 million. We've got a lot of options on issue. The share price currently is about 2.8 cents. So the market capitalisation is only, I can't read the slide, but I think it's about 22 million, something like that. We think the company is significantly undervalued. It's got exceptionally good projects in front of it, and I'll explain some of the financial elements of our expectation and what we're expecting later in the presentation. We've recently reviewed our strategy for going forward. Like a lot of small companies, you tend to sometimes gather up too many assets, and this can be diverting in various ways, but we're quite focused on where we're going in the next couple of years. The little Nueva Sabana gold and copper mine, we'll finish the JORC resources for that in January. We've just completed 10,000 metres of drilling on that mine into the oxide deposit. We'll have the mineral resource estimate in January. The definitive feasibility study will be done in April next year, and we'll start the construction of a 10-month construction period in June 24, so that we should have a cash flow from that mine in around April, May 2025, and that will relieve us then of the pressure of going back to the market all the time, which has been a bad habit in the past, unfortunately. How we're going to finance this? We've got offers from several commodity trading companies to provide us with a $20 million advance on the gold and copper concentrates that they'll purchase. And this is all we need to develop that mine. It's quite low capex. So that's number one priority for us. The second priority is to bring along the La Demahagua project. That has been delayed a little recently by adding this two-stage roaster. But the addition of the roaster takes away the risk of being able to sell the gold arsenate pyrite concentrate, which is a fairly difficult market. So by producing the doré instead, even though it's added another $45 million to the construction cost, it will improve the profitability of the project and the NPV quite significantly. So that project's been delayed. We hope to have that under construction by the end of 2024. It's about an 18-month construction period. So mid-26, we should be bringing our second project online. Now, the combined gold production from those two mines is about 150,000 ounces per year. And, sorry, I turn my phone on. About 150,000 ounces per year. And, of course, you've got to remember that we effectively only have 50% interest in that. So they're the two projects, and I'll just roll on and talk a little bit about, and you might note at the bottom of this page, I've acknowledged the fact that Richlink Capital, George's outfit there in Sydney, have worked with us in having a look at developing the strategy for going forward. A quick look at the calendar. Never Sabana Mine, I've more or less gone through these anyway. The key element is to be in start that construction middle of next year and have it up and running 10 months later. Similarly, without going into the detail, again, I've mentioned the sort of time frame to La Demahagua. The key is the metallurgical test work that's going on now through a Chinese engineering group, and I'll speak about that quickly in a minute. The El Pilar porphyry property that Chris will talk about, we expect to start a 2-year exploration program for that about mid-next year. We firstly have to negotiate the terms of a new copper joint venture for those properties to be placed in. Chris will also talk about how he's going to approach the Sierra Maestra copper concessions. There'll be a prospecting operation that'll start early next year. Now, going back to this small mine, again, there's no need to go through all the data, but we have 24,000 metres of historic drilling that were done by Canadians. There was 1,800 metres done in 22 by us, and the current program, in fact, has got up to about 8,500 metres rather than 7. All of that's now been finished. And as I said, we'll establish the JORC resources in January next year. The grades if anyone's showing any interest in us, can have a look at the ASX announcements on the grades we've been achieving for both gold and copper in this oxide deposit, and they've been outstanding, really, really high grades. We're developing a mine plan of around the 650,000 tonne per year, which is quite small. It's got a very low waste to ore ratio. It's shallow. The gold is outcropping. And as I said, initial production, probably about 50,000 ounces per year with a concentrate grade going around 55 grams per tonne of gold. And then the 25% copper concentrate will follow, probably 35 to 40,000 tonnes per year. Now, the estimated project development cost is only 23 million. And the shareholders' equity is 3, which is quite small. We've already put up our $1.5 million in the initial costs of the feasibility studies and so on. And the project finance of 20 million, we expect through an advance on concentrate sales. it's a very simple mine. It's an ideal location. It's flat site, rail links, high tension power close by, highways to the port, rail links to the port, water supply. No people living on the site, but there's enough little towns around to access labour. So it's an ideal construction site for a simple mine. As a matter of background, the concentrator for the Nevasabana mine, and also, in fact, for La Demahagua, will be provided by a Chinese contractor called ProMiner, a very capable group. And just now moving on to the La Demahagua project, that's actually a gold antimony silver deposit. It's predominantly gold, but the antimony in it is going to be a very interesting byproduct, and it's in great demand. So as mentioned before, the mineral resource estimate is 905,000 ounces gold equivalent. The concession's about 900 hectares. It's on an island, the Isle of Youth, which is 60 nautical miles from the mainland. The mine site's on a paved highway from the local port, and it's connected to water, electricity, fibre optic cable, nice flat site, also ideal mining site. Our mining rate's going to be 815,000 tonnes per year, and we'll produce 2 concentrates. And actually now a third. The 50,000 tonne will be a gold arsenopyrite that will go to the processing plant. 5,500 tonne will be a gold antimony silver concentrate. And the life of that mine will be about 9 years, probably double with underground mining. The cost of developing the mine is 100 million, and the shareholders' equity is 27 million. Debt will be 73. We have to invest 13.5 million, which is 21 million Australian. We've invested 16 million to date, and the rest will be just subscribed for our 50% equity in this project by June of next year. The estimated life of mine surplus is $355 million, and the NPV at an 8% discount, $1,800 per ounce gold, is 200 million. Going on now to this processing plant that I talked about. As I said, the facility will be a 75,000 tonne per year fluid bed roaster. It'll also have a 100,000 tonne per annum CIL circuit attached to it. It'll process the La Demahagua gold arsenopyrite concentrate. It'll also process 35,000 tonne of gold oxide ore that will be mined separately from the sulfide ore at La Demahagua, and 25,000 of imported gold concentrate that we'll buy through a trading company. So the target production for the expanded, if I can call it, La Demahagua project is about 100,000 ounces per year, and that will be refined overseas. We had $45 million for this plant on top of the 100 million for the mine development, so we've got an all-up cost of 145 million. We're also looking to attract a Chinese group to come in as a shareholder on this project, maybe for a third or even 50%, that has roaster experience. Now, there are people around the world with that experience, management experience, but it'd be attractive to us to find an investor who would probably come out of China that has that experience already, and would become our partner in the joint venture company, along with the government. As I mentioned, the operation of that roaster and the CIL plant will significantly increase the profit and the NPV. I can't be certain of it because we haven't done the final DFS, but it's probably going to be something in the order of $300 million US as the NPV for the combined project, and that represents about 700 million of surplus US dollars of surplus cash over the 9-year life of the project. If I go to the next one. Now, again, this is a Chinese connection. Chinese engineering group called Bigrim Technology, who are one of the leaders in design and construction of roasters, has started the metallurgical test work that they need before they can give us a turnkey offer for building this unit. And I must say they've already given us preliminary cost for both CapEx and operating costs. And that's why we're so confident of the ultimate outcome of building this unit. Now, I think that's probably all I need to say about the two projects. They're very defined. They're relatively simple. They're open pit. Very saleable product, whether it's the gold antimony concentrate or obviously doré. And the concentrates coming from the first mine are oxide. They're very clean concentrates, very saleable, both copper and gold concentrates. So we've got a few years of construction ahead of us, but by mid-2026, we should be, with our partner, as I said, producing about 150,000 ounces per year, with 10 years in front of us, and generating quite a sizable cash flow, and all this on an investment of around 25 million Australian dollars. So we're looking forward to the next year or two, and we think we'll see outstanding growth in our share prices. People realise what potential we've got, quite apart from the copper prospects that Chris will talk about now. Thanks, Chris.
Thanks, Brian. So we'll start with talking about El Pilar. So El Pilar is a copper-gold porphyry system. The drilling that we've just completed is the oxide drilling in the very upper part of the system, and that's where the initial mine will be located. So porphyry copper systems can be very large. The drilling that we're finalising now is we're doing some deeper drilling into the sulphide part of the system, and that's to locate the main porphyry body. So the upper part, the oxide part, is part of the same system. It's just oxidized, and that's where the initial oxide gold and copper resource will be mined. The deeper drilling tests for the extensions to this, and this will be ongoing over some time, but the priority is to get the oxide mine running up in short term. So at El Pilar, we have a large tenure there. There's a lot more potential. There's been a lot of alluvial and superficial artisanal mining in that area. The porphyry system and the surface footprint is very, very large. It's multiple kilometre size. So that's what you want to see in a porphyry system. So there's definitely a lot more to this system. It needs to be explored with more drilling. You can see from the topography, it's fairly flat there. So it's an easy place to work, but it's an area that will be drilling intense. So the focus moving forward will be to find the sulphide lower parts of this porphyry system and potentially to locate more. So that's very briefly what El Pilar is. So let's now move to the Sierra Maestra exploration project. Here's just some photos from El Pilar, which shows the surface mineralization. So you can see extremely altered rock. This is related to alteration related with the porphyry system invading. So when you see this at surface, that tells you in the right location. Okay, that's just some geophysics. It shows where we are and some of our recent drilling. So what we've found recently is that as we drill deeper into the porphyry system and off the flanks, particularly to the south and southeast of El Pilar, we're finding that the porphyry system is associated with a large diatreme, which is part of a porphyry system. It's a big breccia system, and in those parts of the system, you generally find a lot higher grades. So we've been drilling some very, very nice high-grade zones, of which we're, with the XRF readings, we're still waiting for the final assays, but generally they're very, very close. We're starting to get large widths of very high copper grades. So this is basically showing us that this system is going to get a lot larger, and both laterally and also at depth, and that'll be the target as we move along in the exploration process after the development of this mine. Okay, we move on to southeast Cuba. Okay, so we've picked up this area. We've made a lot of applications in this part of Cuba. It's in the very southeast part. It's an area we call the Sierra Maestra Copper Belt. This area here is extremely prospective for very large copper deposits, particularly copper porphyries and replacement type systems. What brought us into this area is a number of things. First of all, this is where a mine called El Cobre is located. El Cobre is a very large copper polymetallic system. So it's basically copper gold with some lead and zinc. and it's related to a porphyry system. And this mine has been running since the 1500s. So this is the first copper mine in the Americas. So straight away we know in this belt it's very, very prospective. And the second part of this story is that it's Eocene in age. This is a geological period which you find in places like Chile, where you find the supergiant porphyry systems. So it's extremely prospective. It has a lot of mining history here. And the key thing, it's very underexplored. So we've been focusing on some areas which we call the La Cristina and Vega Grande projects. We have a large tenement area there. And what that basically covers is a large area that has a lot of surface mineralization. It was exploited by underground mining, small-scale tunneling by artisanal miners up until pre-revolution. So we have surface mineralization there. We've got large areas of alteration, but we also have underground mining, which is targeted there. So we know it's a metal-rich environment. Again, this area has not been explored at all. There's been only a small amount of drill holes into this area. We have a footprint just in La Cristina of about 5 kilometres by 3 kilometres of continuous mineralisation and surface alteration. So this is an exploration program where we basically put together the key areas in this belt. As I said, it's highly prospective. This is a belt anywhere else in the world with this geological period that forms giant copper gold porphyry systems and copper molybdenite systems. So we will be kicking off our exploration in the Sierra Maestra in the first quarter of next year, and we hope to be drilling in this area fairly quickly. As Brian said, the government is our partner, so everything is very fast-tracked. I mean, we went from this area from doing the initial visits to making applications and having them granted within a period of 3 to 4 months. So that is globally probably the fastest you can get anywhere. So we're very confident that we can move ahead the exploration here, and we're very confident that we're in an extremely prospective environment to find large-scale porphyry systems and associated epithermal systems here. Thank you.
Thank you, Chris. Thank you, Brian. We have overstepped our time a little bit, but I know you guys are very passionate about your project. It's unfair for us to stop you for the time you really deserve. With that, I think I'll just straight go into some of the questions raised by our audience. Are you willing to work with Chinese investors? If you do, if you are, what type of investors would be ideal?
Well, I've spent since 1975 going backwards and forwards, having business links with China. I brought Angang Steel in as a joint venture partner to Portman Mining, and so it goes. In my days in the coal sector and the iron ore business, a lot of relationships in